Entries are where most traders lose money in the market, not because they're unlucky, but because they don't know when to enter the market. In this video, I will show you exactly how I entered the gold market using my hybrid system. If you've watched the previous video on market structure, then you already understand the direction of the market. Now I will show you how I actually get into trades without guessing. Welcome to my chart. This is the whiteboard and we have type 1 entry model. My entries, guys, they are not random. They are built on confirmation, structure, and confluences. Guys, let me show you my first entry model. Let me break down everything for you guys in P. Pay attention to what's happening right here. Okay, now the first thing is that we have our type 1 entry model. On the confluences, the first thing we want to see order block, secondly we want to see a sweep, then thirdly we want to see a liquidity, and fourthly we want to see a break of market structure. Now the type 1 entry model is that we must have a liquidity before the break of market structure. Hence, you shouldn't take that trade. The one that is more important is that liquidity needs to be created before the market breaks structure. I mean, think about it on the normal circumstances now. If you see that the market is coming back to take liquidity, it has already created the liquidity before it's coming back to take it. Tap into our order block and the market is going to drop to the downside. This is the type 1 entry model. Now coming on here, since the market is dynamic, there are numerous forms of the type 1 entry model. This other one is when the market did not give you a shift in market structure. It only gave out a liquidity, which is fine. Like I said, you need to understand the confluences behind it. Then you understand the psychology. Now, the psychology is that the market needs to create a liquidity before the break of market structure. If you watch the previous video on market structure, then I believe you understand the direction. Now, let me walk you straight into the chart. This is good and this is on the 4-hour time frame. The way we mark out our structure is that we need 2 highs in the market. So this happens to be the first high in the market. This is the second high in the market. Now you can call this thing whatsoever thing that you felt like calling it. Some people will call it an M pattern. Some will call it a double top. All I'm saying is that just know the psychology behind it. The name doesn't matter. What matters is the psychology behind it. The market has swept liquidity around this region with this big bullish move to the upside. Now it's telling you that the structure is making wave to a new bearish movement to the downside. So if you understand the psychology behind it, you will not want to be buying from other blocks that you'll be seeing around here because the market is going to crash everything. It has already given you a structure telling you that the market is about to go bearish. All you need to do as a smart trader is that you need to start looking out for the type 1 entry model or the type 2 entry model to start selling the market alongside the structure that is giving you for a new trend, which is a bearish movement. We're talking about the type 1 entry only. After you've identified these on the 4-hour time frame, what you do is to scale down to the 15-minute time frame straight up. Guys, this is how the 15-minute time frame chart look like. The market is making wave of a new bearish movement to the downside. All you need to do is to start looking out for the type 1 entry model. First off, we see that the market is giving us an order block around this region. Okay, you can scale down to the 5-minute time frame to get to see it more clearer. You can scale down to the 5-minute time frame to see it more clearer. Now we see that we have a sweep right here. There's a sweep right here, guys. You need to open your eyes to these things. You need to open your eyes to these things. Right? This is a sweep. Now the market has created a sweep right here and order block right here. The next thing is, where is the liquidity? The liquidity is seated around here. So this is the last high that the market created. This is the liquidity right here. We call it LQD. Liquidity that the market created before the break of market structure. So it usually creates the liquidity before the break of market structure, which is OBS. So we're going to convert this one to be blue color, keep it to be blue. We see that we have a sweep right here, we have an order block around here, then we have the liquidity seated around here. Now the liquidity will be created before the break of market structure. This is how we understand the market using the hybrid system. Okay, entry right here, and your stop loss is going to be above here, something here. You're going to keep your stop loss here and target whatsoever you want to do, but I always do 1:5 right now. Let's see how it's going to trade. You can can see how we got tapped in around this region. As soon as the market clear out liquidity around here, instantly tap into the order block, and let's see if this market is something that is going to give us our 1:5. This is another point of entry right here. This is another point of entry. Now, you just need to keep doing this thing over and over again, okay? Now, this is the break of market structure. This is a sweep right here. Now, this is the liquidity, which happens to be the last high right here. The market created the liquidity before the break of market structure. Now, there's an order block sitting around here. If you go on the 5-minute time frame, that's where you're going to see it clearer. We have our order block right there, and our entry here, and our stop a little bit above there, and take profit 1:5 as the case may be. Now let's see how that played out. You can see that we are in, the market swiped to the downside and boom, to the downside. Now this type of system is something that you need to stay between the 4-hour time frame, the 50-minute time frame, and the 5-minute time frame. The reason why I don't go on the 5-minute time frame is because I don't want this video to be too loaded for you guys. This is just one of my entry models. Like I said, I have two types of entry model. This is the type 1 entry model. On the next video, I will break down my type 2 entry model, which is even more powerful when the trend is on a very strong bearish or bullish trend. Make sure you subscribe to this YouTube channel, guys, so you don't miss out on the next part. All that being said, guys, bye for now and stay blessed.